Next up, we are moving more towards the focus on MENA and emerging markets and looking at tactical private investment opportunities. I would like to welcome the moderator for this panel, which is May Nasrallah, and she's the founder and executive chairman of deNovo Corporate Advisors. So please welcome May to the stage.
Good morning. It's a pleasure to be here with you today. Thank you for having us. This is a very interesting panel that I'm honored to be moderating. Our region is very well known globally for being a source of capital. People, funds, fund managers from all over the world frequent the GCC for them to gather assets, gather capital for them to invest internationally. Much less well known is the region as in of itself being an interesting investment area for people to come in and invest their funds, invest their money, and look at interesting opportunities as such. In particular, in the last decade or so, we've seen opening of opportunities for investors to come in. We've seen family groups that have opened their capital structure for non-family group members to come in, investors to come in, financial strategics. We're seeing governments that open up some sovereign entities, sovereign owned organizations for them to get international investors to come into those. We've seen some groups, entrepreneurs, who have built a company and are looking to exit, and they're seeking either financial or strategic investor to take that. So there's been a number of interesting investment opportunities that have presented themselves as a result of our cycles and the growth and the opening of our region as a general matter. Who have those investors been? We've seen regional private equity firms, we've seen international private equity firm, we've seen some sovereign wealth funds, we've seen other family groups invest, and we're seeing some international strategics invest. But it would be very interesting today to talk about some recent trends that we're seeing. Some of the complaints that we've also heard is, well, there aren't enough exit opportunities, there aren't enough IPOs that we're seeing happening, there aren't enough ways for one to take their capital and recycle it, there isn't secondary opportunities for other funds to buy out of funds, we're not seeing leverage recaps, we're not seeing, generally speaking, tremendous amounts of exit opportunities. I believe there's a little bit of a misnomer. I think there's a little bit of a misconception about what the opportunities are and what the hurdles are. And recently, in 2019 alone, we're seeing some very interesting ways that have, if you want, gone against that trend. Aramco alone's IPO opening up its capital structure for local regional investors, but eventually for international investors. That alone is a sign of how much the region has developed. One other very good example is we saw recently a combination of BlackRock and KKR invest $4 billion in ADNOC's pipeline business. That's something that the sheer scale of it and the openness of it is something that is also great to see and a trend to follow. We've even seen some secondaries happening where we've seen CVC recently take a 30% stake in GEMS Education, taking out other private equity investors, including Fajr Capital, as well as Blackstone and Mumtalakat. So there's a lot of trends that we're seeing develop in the region. And with us today is an esteemed panel that can help us really shed some light on some of these trends that we're seeing, and it's my privilege to introduce them to you. To my left is Huda Lawati. Huda Lawati is a partner at Gateway Partners, and before that was the CIO at Savola Group in Saudi Arabia, and previously a partner at Abraj Capital. To her left is Stergios Voskopoulos, who is the CEO of Kanoo Capital, which is one of the largest regional family groups, conglomerates, and he manages their investments. And before that, he used to be at a combination of various different institutions, including Barclays, InvestCorp, and others. And to his far left is Iqbal Khan, who is a founding board member and CEO of Fajr Capital, and previously was the CEO of HSBC Amana. And all three of them have a wealth of experience across the region. I don't want to age anybody, but they have quite a few years of experience behind them in working in this region in various different investment capacities. And I thought it was an interesting combination of panelists for us to open these topics and have these discussions with. Perhaps I can open up with my first question. And I think it's a question that I would love to hear all three panelists' views on, which is, in your personal experiences, could you please maybe tell us what are some of the investment strategies, investment opportunities, highlights that you have seen why you look at investing in this region, and also, if you don't mind, touching upon some of the pitfalls, because I think it'll be interesting to learn from both. Perhaps, Huda, I'll start off with you.
Sure. So I think in terms of the investment opportunities, they're very diverse. There's no specific sector investment strategy that I would say. It's more about the type of things you focus on. I think when you have a good management team that you're backing, and you have a resilient company with proven track record, particularly with regional plays, we've seen a lot of success in that. I think you mentioned a couple of examples. If you take the three big examples of exits we've luckily had this year, we've had the IPO of Network International, which was a PE-backed IPO, which again had gone through 2 rounds of PE. Fajr's exit from GEMS was again a secondary, and a strategic Uber coming into Careem. You have different examples of things, but the one common theme around them is that these are regional champions and scale players. So I think that theme works well, but always I think it comes down to management teams, because even when things get difficult because of an unpredictable macro situation or something happening, it's usually a good management team can manage your downside. And in the PE business, it's not just about looking at the reward, it's also very much about managing the downside, which takes me to your question on pitfalls. And I think the biggest pitfall I think I've seen is trying to do a copy-paste model, taking whether it's expertise in terms of people, business models, or just ways of working and trying to do a copy-paste into our region. That doesn't, you have to understand the local business as well. You have to understand how the local market will react to the managers you bring in, the business models you bring in, the practices you bring in. You always aspire to get best practices, but also be cognizant of the environment that you operate in.
Great, thank you. Maybe Stergios?
Sure, thanks, May. I believe that there are great investment opportunities in the region from the fact that there are still business models that are not as sophisticated in terms of efficiencies, in terms of optimization, how you provide your services or your products. We are in the crossroad between Africa and Asia, so this region has enormous opportunity and potential to actually develop businesses that can cater not only to the region, but also to these adjacent countries. We're talking about a multi-billion region. So all we need is, as Huda said, proper management teams, business models, have sustainable business models, and vision for the long term, not only for the short term. And that's actually the pitfall sometimes that we've seen in the region from different sectors, from the real estate, even from healthcare, from education. You know, some businesses have excelled, but many of them have failed. Why? Because it's always the hype. If you do something and I like what you do, I'll do the same. It's the copy-paste. But how are you going to execute on that? You need to have proper team, you need to have the vision, you need to have sometimes know-how that can come from outside and match to the vision of the regional leaders, owners, and shareholders, and make it like a sustainable business model, something that can last for 5, 10 years plus. It's not only about what happens in the next 1 or 2 years.
Sure. Thank you. And Iqbal?
Yeah, so thank you, May. The region is going through a massive economic transformation. And the transformation is taking place in terms of the role of government is to become better referees, better umpires rather than just players. And where the government is playing, the government is also playing in partnership with the private sector. So we are seeing huge amount of PFI opportunities coming in. The second source of the opportunities are the private sector. Intergenerational family businesses, looking for a journey partner, looking for a steward to guide them to the public markets or to the next stage of their evolution. So there are massive opportunities in the region, and if you can build a track record of delivering on the promise which you made to your partners. And we've had a philosophy of investing called the philosophy of better ownership. So before, as private equity, you invest into any business, you ask yourself this question: how can we be a better owner? And every business you invest, you got to respect the owners who are there before you. And we are just custodians of their aspirations for a period of time and taking them to the next stage of their evolution. And every of the platform investment which we have made, We also realize regulations are changing, in some cases becoming more enabling, in all cases becoming more market-driven. Also, these businesses are being impacted by digitalization. So our education business had an EdTech strategy. You have to look at the business design changes. So if the partners, whether the government or the private sector, can see private capital as journey partners, as stewards, and know that we have the philosophy of better ownership at investments, during the investments, and at exits. There was one particular company which we sold to a Saudi investor. We had an investor from China who was prepared to pay a higher price. But we felt this company's business was in Saudi Arabia, deeply embedded into the public sector, and we felt that the Chinese owners, though they were paying us a price, may not be able to understand the cultural sensitivity, something which Huda talked about. So you sometimes sell a business at a lower price, not because we don't want to maximize the price, because we want to make sure these businesses continue to be successful post our investment.
Sure.
And that is the philosophy of better ownership at exits as well.
Sure. Thank you very much. I think that actually leads me very well to my next question, which I would like to ask both Huda and yourself about. I'd be remiss not to mention it. The demise of Abraj in this region has been widely held, and for those of you who don't know, Abraj was one of the largest, or was the largest private equity firm that was originated out of this region and had a broad investment strategy across all emerging markets. And they've had several issues that hit them, governance mostly related, and as such the organization was liquidated effectively. The question that I have is, it's widely held that the situation with Abraj has undermined investor confidence in our region. And as third-party fund managers, both Gateway as well as Fajr, how have you had to deal with that? Has that been an inhibitor for your abilities to raise funds? What have you had to do in order for you to overcome this and continue to do what you do? Perhaps I'll start with you, Huda.
Sure. I think we're all the wiser for it. I think that's how I would put it. Is it making things more difficult? Of course, because people have more questions. There's more uncertainty. There's more reluctance. In any case, emerging markets is an area where especially foreign investors always think about governance and the concerns and the pitfalls associated with that. So this sort of looks like a validation of that concern. But I think that in any of these crises, there is learnings. I think we have learned as money managers, as the investors have learned, the regulators have learned. And it's forcing a level of transparency that I think is to the benefit of everyone involved.
Sure.
And hopefully, and again, you sit with investors, people who understand and are let's say institutional investors who've been investing for long, they understand governance, they understand fraud, they understand all of those things, and they do know how to look at it, but they just want to know, well, what are you doing that is that gives me the comfort that is not a similar situation, what level of regulatory, both external and internal do you have, what governance models do you follow? So I think it's really, we are all the wiser for it, and I think it's ultimately something that we can all use to improve the way we work.
Certainly. And Iqbal, what do you, please add some?
Every setback has within it an opportunity as well.
Yeah.
And the opportunity is for the region and for all of us in the industry and all our portfolio companies to upgrade our governance structure. The Chinese have a saying that the fish rots from the head. We need to fix our governance, bring in more independent directors. I think every company should have a reputation and ethics committee. Today, transparency is so important. And in the world of digital world where information is moving at the speed which is as fast as light, we need to make sure that we focus on the reputational risk management issues. So as tragic as the event was, I believe that the industry and the region would learn from it and come out stronger. The appetite by investors, if there are good deals, good opportunities, deals would happen.
Yeah.
and will continue to happen. Foreign investors are always knocking on our doors and saying, which is the next deal which you are doing? We would like to invest. And these are big institutional investors from the West. It's just that we need to get our act and benchmark ourselves with the best. And if we can do that, then I think then we would have learned and benefited from a tragedy.
Well, certainly as a corporate finance and M&A advisor, I certainly wish to see much more activities and investments coming in the region. It's
if I may add something here,
Please,
right?
yeah.
I mean, I'm not coming now, I'm not representing any P fund, but I've been working in the industry, in the region for a while too. What happened with Abrat, if I just make comment, is a good thing. At the end of the day, it's a good, bad thing that we have behind us. So now the industry is more robust, I believe, from a compliance and corporate governance perspective. And we need to have it grow. It's still non-penetrated, which is actually a great opportunity for both of you right now in terms of grasping into the opportunities.
Stergios, you actually are the person I would like to ask the next question to, which is, as someone who's managing family group money and looking to diversify the income or the earnings of that family group into other investments, and in the environment that we're in right now internationally, where there's a lot of turbulence, we've heard a lot from our panelists earlier on and speakers earlier on about just global markets, what's going on with them. And I appreciate that your remit is actually quite global. Where do you see pockets of investment opportunities? How do you navigate through such a turbulent market environment?
Sure, we're a very large regional player, and it's a family-backed group. Therefore, we have to preserve the wealth, but also to grow the wealth. Preserving, how do you do that? Also by focusing in the region, make sure that you are a leader in all of our businesses, that we are owners, direct owners, but also be able to preserve wealth by minimizing your downside risks, and how you do that by diversifying and by asset class also, and by geography. So what we do internally at the group, we have our direct private equity portfolio, which is mainly regional, and that's where we can actually partner and co-invest with other PE firms from the region. We are also the feedstock to the PE firms here, because we are providing businesses that they could consider also to buy in. Globally, we do that by investing through funds and by co-investing also with funds.
Yeah.
And that's where we identify, we have our own tactical asset allocation within the group, so we see where the trends are, where the dynamics are. We are not we're not investing by doctrine, saying that this is the best asset class to go, do it, but also by selecting within this asset class how to invest.
Yeah.
Is it through a fund manager? Is it through a co-investment? Can we add value to this investment and bring them to the region, help them grow? So it's a quite dynamic process that we have developed internally to grow and preserve the wealth, because you know the owners of Kanoo Group are the family themselves.
It's interesting to see those strategies play out, and actually, Iqbal, perhaps for you, you're looking at investments across Middle East, and you've done some in Asia. Huda, yourself, we're looking at Gateway. They've done some investments into the region, but also into Asia and to Africa as well. And we're looking at regions and countries that have currency volatility. We're looking at countries that have, political volatilities as well. And I've also seen that you've done some investments which are structured. So not your plain vanilla private equity type investment, but also structured investments. Could you elaborate a little bit about those themes and what you think, and where, what got you thinking about doing those types of instruments, and how do you hedge yourself?
I think the structuring is actually exactly there to address some of the risks that you're pointing out. I think from a obviously mandate perspective, the markets that you invest in as a function of obviously the experiences of partners. You want to invest in markets that you know. But also the opportunity, the growth factors are very similar in these markets. We've heard all the stories, the demographics, urbanization. What is the issue? They haven't necessarily played out in terms of returns because of foreign currency, because of exit, or because of counterparties that weren't quite what you were hoped for. So I think the structuring, first of all, your knowledge base, but then the structuring goes some ways to address that, which is have either pre-structured exits through put options that are collateralized, have dollar instruments where that can be actually supported by the company or the founders who are seeking the capital, take out dividends where possible. And often you do that by giving up some upside. which we don't think is a bad thing. If I'm managing the FX, which is one of the biggest risks, but I'm managing to get equity-like returns by playing across the capital structure, I'm happy to do that. We've seen more of that, to be fair, in Asia and Africa versus the Middle East, although we've seen some of it here as well. But that's the sort of way to address it. In Africa, I think the other thing, and actually for us as a fund as well, looking at this broader region allows us to seek relative value. So if one particular market is going through the kind of turmoil you're talking about, geopolitics or a local cycle or too much of a rush to an exit and or hype, then we are able to stay away from that particular market for a bit because we don't have this money burning in our the hole in our pocket to invest just in that particular market.
Great, thank you. And Iqbal, do you care to maybe add anything to that?
Yes, so I think there are two aspects to this question. One is the business model through which you invest with public sector, with governments is changing, where governments are going through the PFI initiative, but they want local opportunities, local funds, partnering with PE funds in order to bring in the professionalization. So that model requires the PE funds to be more flexible. For the private sector, the biggest thing which we focus on when we're structuring a transaction is good governance. Independent chairman of all the board committees, creating a reputation and ethics committee, bringing in efficiency to the capital structure. The region suffers from very poor capital structures in most of the companies. And then aligning Islamic finance with the opportunities in order to bring this ethical perspective. And in my view, most companies in the next 10 years would start in the region looking at not only TSR, total shareholder return, but they will look at something called integrated stakeholder return, where they would look at what's happening to the environmental returns and other things. So this trend, which is shifting towards more transparency, better governance, better ethics, creates better companies.
Sure.
And there is always a market for good companies, and there will always be buyers, irrespective of what happens in the macro situation.
Thank you. Well, I think we have time for one last question, and maybe I'll very briefly, sort of quickly ask each one of you, where do you see the most interesting investment opportunities in the coming year or two, so in 2020, 2021? So I'll start with you, and we go from there.
For me?
Yes?
Yeah, thanks. We look at logistics. We like it as a sector. It's quite dynamic and very broad. And the group has been the pioneer in logistics. So logistics with innovation is a very interesting area to invest in that we like. Healthcare, of course, but we need to do it probably with other funds, co-invest, and experts. And the third and major is sustainability in general, from an environmental perspective, from climate change. We see that, this region has grown enormously. However, in terms of infrastructure, we're still behind. So when it comes to water, when it comes to waste management, when it comes to different areas. So that's an area that we're looking at. And it's very sustainable and long-term.
I completely agree with you. Huda, any views?
I agree with what Stergios said, so not to repeat, I think, but the general concept of innovation in any sector. So as Iqbal mentioned, the digitalization is a trend. So there's a lot of old school businesses that need to modernize themselves, adopt technology. I think that creates opportunity. Infrastructure-linked opportunities. And I think there's a lot of opportunities in, I would call it broadly, corporations, whether they're mergers to consolidate market players, because as the cost wave comes our way in a very strong way in all our markets, that I think is important for efficiencies and productivity, but also just partnerships. And I think one example I like to talk about is not regional, but you wouldn't have thought 5 years ago that a company like Nestle is going to pay someone $7 billion for a coffee brand, but they did for Starbucks, and shows you the power of just cooperation in different things, because different companies, different people excel at different things. So I think that's a theme that will become relevant here as well.
Yeah, I entirely agree. Iqbal?
So there are lots of platform investment opportunities in defensive businesses like education, healthcare. But the key thing is that the business design, for example, from healthcare, is changing from sick care to healthcare, towards wellness. So we need to keep monitoring what's happening on the business design front, not only just the tech side, because Uber is a business design, Airbnb is a business design innovation first before it is a tech innovation. So all our platform investment opportunities which we see are being impacted by regulations, by business design innovation, and digitalization. Pulling them together is a very interesting opportunity to build the next generation of businesses. The businesses which have been there in the past, I believe about 25 to 30% of them will not exist if they don't change and innovate. So that's the big opportunity, and that is a duty for us to take these companies to the next generation.
Absolutely.
The next level.
Well, thank you very much. This has been a very interesting panel. I'd like to thank all of our panelists for their observations, their views, and their comments. I mean, I think I'd like to conclude by just simply saying that this region does present interesting investment area. We've seen a lot of support from government-related organizations. We're seeing a lot of creativity coming from the private equity sector. We're seeing a lot of openness from the family groups. It is a region where one would be remiss not to look at, despite any potential perceived risks. There still is a lot of opportunities to look at, and it's one that is certainly, as they put it, open for business. But thank you very much for your time today. Thank you very much to the panelists for your comments.
Thank you.
Enjoy the rest of the day. Thank you.